Now looking underneath Visualize on the left hand side, we come to ratios. Here they give us a mix of profit and loss, balance sheet and custom ratios. You can see these in a figure format, or the more basic ones such as gross margin and net margin in a visual format, which Tom will run you through shortly. Ratios tend to be a lot better for comparisons as opposed to just comparing individual figures, which is why you might want to use them. If we look at the first tab now here, we see profit and loss items, which are gross margin, operating margin and net margin. Now what's quite useful about Syft is that underneath it gives you a description of what each of these three mean. You can compare these month by month or by year, such as January 2020 and January 2019. Now the second tab here, the multi-period profit and loss ratios, shows the same thing effectively, but you can do it over multiple periods such as 12 months in a row or 1 month spread over 4 or 5 years to see trends and pick out any points in particular. Now if we look at the third tab, you get to balance sheet ratios, which are split into liquidity, which is your short-term survival ratios, solvency, which is your longer-term survival ratios, and dew point analysis, which is how much of your funds are you using on a regular basis. Again, all of the details and the descriptions of what these mean are underneath, so you don't have to worry if you're not sure on any of them. Now I'm going to pass you over to Tom for if you want to make your own custom ratios.
So moving on to custom ratios, these can be created by yourself with great ease to show a key bit of detail that you might not be able to find elsewhere. For example, in this custom ratio that I've created, I wanted to see what percentage of my total income was made up from shipping income. So I started by clicking the add account button and then selecting shipping income. I used a divide symbol and then found my total sales account. You can then get the option to add in your ratio explanation in case you want a reminder to show you what it means, or if you want to show it to someone else, before choosing whether you'd like to add it in as an amount or percentage format. I've selected percentage here as I would like to see what percentage of my total sales is made up from shipping income. As a unit of measurement for the future, you then get the option to say whether this increase in this ratio is positive or negative thing in terms of the performance of the company. So for this ratio, I've suggested that an increase will be negative, as shipping income is likely to be far less profitable than other forms of income for the company, so it would be a good thing to see this ratio decrease. The next graph is showing gross margin month by month for the past year. So this shows a monthly average as well as month by month. It can be particularly helpful for identifying months where performance may not be as strong as others, which may lead to further research into whether sales may have underperformed during this period or where cost of sales were particularly high. So then this takes us on to the net margin. The net margin follows the same style as the gross margin page in terms of the 12-month average and month by month. However, it gives you the chance to identify periods where net profit may have been higher or lower. So this could lead on to research as to whether general expenses were unusually low or high in these periods. Both of these graphs show Syft's real benefit of being able to visualise how your business is performing based on margins that would usually be unexciting and difficult to obtain just from your accounting package.
Okay, after ratios, there are three smaller elements of Syft that you may or may not want to use, and I'll run through those quite quickly. Firstly, there's benchmarking. What does benchmarking mean? When you first set up your Syft, you will describe what sort of industry you're in. And based on that description, Syft will analyse your results against other businesses in the same sort of industry, and as well against the industry peers, the average for your industry that they pick up from elsewhere. And so within benchmarking, you can look at your entity against the peer averages, and you can also get an analysis as to whether you're ahead or behind your industry peers. What's the purpose of this? It gives you an idea as to where you are in the industry. For example, in the the example we're showing you on the screen, sales for your entity, £73,000. The average for this sort of industry, which happens to be professional, scientific and technical services, which is quite a wide description, is £16,000. So you're way ahead in sales. Now, that doesn't necessarily matter that much in itself. It's more a matter of how that changes over time. And also where you see yourself in the industry. Obviously, in this case, you may see your firm as larger than the average firm in this particular industry. More importantly, might be looking at the gross profit percentages. The example I'm giving you there isn't very good because we haven't got much in the way of cost of sales, but you can see your gross profit percentage against the average of your industry. And similarly, net profits, where do you stand with the average of your industry? Now, on the right, there are indicators. Obviously, where you're doing well, it's green or bright green. Where you're not doing so well, it's red. In this particular case, the expenses of this business are a lot more than the average for the industry. But overall, you're outperforming in terms of net profit and profit after tax. That's benchmarking. I'm not going to go too far into benchmarking today because it really needs to be tailored to your business. But it's quite a useful little addition to Syft to have a look at from time to time when you're trying to think about your business compared with other businesses in your industry. Then we move on to taxes. Taxes gives you a quick and easy route to calculate your tax. You will probably need some help from your portfolio manager to decide on the tax rate that should be included in this calculation. It certainly isn't an all-encompassing tax calculation. It's an indication of your tax liabilities. So in the example we're doing here, it will take the profit that you've got in your accounts. We will put in a tax rate. In this case, we put in 19%, and it will tell us that the likely tax liability is £23,266. As I say, it can be made more specific by including additions or adjustments to the profit. And if you want to get this to be a very accurate figure, the key here is to talk to your portfolio manager who will set up a specific tax calculation for you so you can see your taxes at any stage. But taxes, that's a route to get hold of how much you're likely to be owing in tax at any one time. The final section we're talking about today, again, is a nicety of Syft. It gives you a valuation of your business. This valuation uses 4 industry standard valuation methods to come up with a valuation of your business. It uses the revenue multiplier. It uses the profit multiplier, the EBITDA, earnings before interest, tax, depreciation and amortization. It uses that figure as a multiplier, and also uses the net assets value of your business, the value of all the assets that are held in your business. All of these valuations give slightly different valuations. In the case we're looking at here, we're looking at valuations between 360,000 and 609,000. They're all different methods to value a business. Overall, the valuation of your business is the value that you're willing to sell it for and someone else is willing to buy it for. But as a quick and easy way to get an idea of what your valuation might be, this particular tab within Syft gives you an indication of the range you might be in. I wouldn't say you would ever use this valuation for valuation purposes, but certainly it's a starting point towards valuing your business. I think the key things here are that if someone is looking to buy your business, they may well be looking at paying you for your revenue, your recurring revenue that you earn in that business. They may well be willing to pay you for the profits that you're making from that business. And that profit might be a profit figure for your business as it stands at the moment, or it might be the profit figure if the business is funded in a different way. For example, the EBITDA multiplier would be the multiplier if we ignore interest, we ignore depreciation of assets, and we work on a pure earnings basis. And as an alternative, someone may well be willing to pay you for the assets you hold in your business. That may well be the case if you've got property. That might be at the property valuations in the business rather than the multiplier of profits or the multiplier of revenue. Different methods to value your business. An indicator, again, the key here is have a look at this so you get an idea of what your valuation might be, but always talk to us here at PJCO so we can go into a lot more detail with you about valuation. And if you're really looking to sell, it is important that you consider that way before you want to sell. So for most of our clients, if they're looking at selling at some stage, they need to be starting to think about that probably 3 years before they want to sell. So today we've run through some of the niceties of Syft, ratios, valuation, taxes and benchmarking. Next week we're going to come on to one of the really important parts of the software, the budgeting element of it. Going forwards, a lot of businesses are going to need to deal with the changes in COVID-19, the changes in the environment for business, and they're going to need to compare their position with what they're expecting to happen. A lot of small businesses, maybe your small business, will have loans, will have debts, might have bounce back loans or CBIL loans, and may have debts to HMRC, and it's going to be important that we plan how you repay those debts and repay those loans. So next week we're going to go on to planning, forecasting the future of your business, a really important session to understand how you look at the future of your business. After that, we're going to really get into the nuts and bolts of cash flow forecasting. Again, Syft gives us the ability to go forward and forecast where your cash is going to be over the next year or so, or longer period for that matter, so that you can look at pinch points, you can look at how you need to change things, what decisions you need to make today or in a few months' time to make sure that you will have sufficient cash to keep your business going. We look forward to seeing you next week.
We hope you enjoyed this video. If you did, subscribe, leave a comment down below. You can also find us on Twitter, LinkedIn, Facebook, Instagram, and quite recently, TikTok. And we'll see you next time. Stay safe.